In today's episode, I'm going to show you how to supercharge your tax-free retirement and put over $70,000 away per year into your Roth bucket. This is a little known planning strategy that you can take advantage of if you pay careful attention to this video and work with a qualified advisor who's able to help you with this planning opportunity. Doing this will enable you to set up a tax-free retirement potentially for your future. Hey, I'm Adam Olson, a CFP and advisor with Mutual of Omaha. I've been in the industry for over 14 years, and I'm also the host of the Money Mastery Unleashed podcast. And I can't wait for you to check out this video today and learn how you can be putting away tens of thousands of dollars per year into your Roth bucket. Let's start by talking about these two different concepts: a mega backdoor Roth and a backdoor Roth strategy. Now, we can use these in conjunction with one another. You see, the mega backdoor Roth strategy is a strategy that you can implement through your 401k plan at work if it has the right products and tools in place for you to do it. And then a backdoor Roth is something that you can do on your own to shift money if your income's too high into a Roth IRA. Now, these strategies are extremely valuable for high income earners seeking tax deferral and tax-free retirement income. Because if you think tax rates are high today, just wait for what they're going to be in the future. And using this strategy, you can put a ton of money away each and every year into your post-tax bucket. Remember, money that goes into these Roth categories grows income tax-free, and as long as you do things the right way, you can take it out income tax-free. Let's get started on the first things here. Let's talk about what a Roth IRA is and why it would be advantageous for you to look at this. I just said it. A Roth IRA grows tax-free, and you can take money out tax-free. In addition to that, you're never forced to take money out of these accounts in the future if you don't want to. So it's a great legacy planning tool as well. If you're planning to leave money income tax-free on to the next generation, this is an excellent strategy for you to check out as well. So a Roth IRA, you have contribution limits into this account, and you have income limits on this account. So if you want to put money from your checking account into a Roth IRA, let's say you're a married filing jointly couple. Well, if you're making over $230,000 per year, you have a phase-out limit that begins. And so if you're a high income earning household making over $500,000 per year, you cannot directly contribute to a Roth IRA. Now, a Roth 401k, on the other hand, if you're working for an employer or you are an employer, you can do salary deferrals. So you can take money from your paycheck and put into your Roth 401k contributions. You can put $23,000 per year away here in 2024 into that Roth 401k contribution. Now, there's new rules out there as well that allow your employer match to be contributed on a Roth basis as well. Just check with your plan sponsor, your HR person, to see if that's eligible to be done inside of your 401k plan. So let's move on here. Let's talk about a Roth backdoor. So say you're this married filing jointly couple making over $500,000 per year. How to execute a proper Roth backdoor strategy is you make a non-deductible contribution to an IRA, and then you simply convert that to a Roth IRA. So you convert those contributions from the non-deductible traditional IRA to a Roth IRA. Now, there's some different eligibility rules and some strategies and some processes to make the IRS happy that you have to go through this. And be careful when you're doing this strategy, because if you have other IRA accounts or balances, it can possibly cause some taxes as well. So make sure you're also doing the IRS Form 8606 each and every year you do this strategy. So if your income's too high, just know that you can implement a Roth backdoor strategy. If you're under 50, you could do $7,000 per year. If you're over 50, you can do $8,000 per year. So even if you're making $10 million a year, you can still utilize a backdoor Roth IRA strategy done properly with the right guidance. It'll allow you to put money into that Roth IRA bucket. Now let's talk about the big opportunity today, this mega backdoor Roth. What is this? Here's how this strategy works. You're essentially utilizing your income from work and shifting it to buckets inside of the 401k plan, allowing you to put more money into the Roth account. So let's start at the beginning here. When you sign up for your employer plan, you have three ways you can put in money. You can put in Roth deferrals right away. You can put in pre-tax deferrals. And then some plans, if your plans allow it, allow you to do after-tax contributions. This is what I'm going to be talking about, the after-tax contributions. So you can put in money pre-tax, Roth, and after-tax contributions. Now, Let's say you're a big proponent of these tax-free income. You want to do as much Roth as you can today. I would agree with you on that. So you're putting $23,000 in salary deferral into the Roth account. Awesome, good job. That's what you should be doing. But let's say you have a bunch more money left that you want to start saving. Well, if your plans allows for it, you can put money into this after-tax bucket into your 401k plan. So the money goes in, and it goes in on an after-tax basis. So you've already paid tax on that money, right? Now, once it's in that bucket inside of the 401k plan, depending on what your plan rules are, you can either convert it right inside of your 401k plan into the Roth account, or you can do an in-service distribution out of that plan into a Roth IRA account. Now, we need to be a little bit careful here how you're doing this, because there are some basis rules, some interest rules that you have to pay attention to when you're doing these things. So just make sure you're working with a qualified professional when you're doing these things so you don't get in trouble with the IRS. Now, when we're doing these things, your Roth deferrals, your after-tax deferrals, don't forget to calculate your employer match and or employer profit share. So all of these things inside of your 401k plan, you can only do $69,000 per year. If you're over 50, you can do 76.5. That is the maximum amount that you can contribute per year inside of this 401k plan that you have. So just make sure that you're not doing too much in these after-tax contributions that it's going to be taken away from your match and or profit share that the employer gives you. So how do you know if you have access to this mega backdoor Roth plan? Well, first and foremost, your employer must allow for these contributions to be made. So if your employer doesn't allow for these contributions, generally speaking, most 401k plans can be amended or changed to allow for this mega backdoor Roth strategy. And if you're a high income earner wondering if your plan has this, check with your HR, check with your plan sponsor, and if they don't, I would encourage you to share this video with them, because this is a huge planning opportunity for you to take advantage of, and this is a great opportunity to put a ton of money away each and every year to set you up for tax-free income in retirement. In addition to that, these 401k plans must permit in-service distributions and or in-plan Roth conversions. That is where you're taking the money from your after-tax contributions and moving it into the Roth account that sets you up for that tax-free growth and tax-free income in retirement. Now, what are these potential benefits and why would you want to do this? Well, it's easy. Think about this. Tax-free growth, tax-free distributions. So whether you're 30, 40, or 50 looking at this strategy, it's a great opportunity to put a ton of money away, over $70,000 per year, using the mega backdoor Roth and a backdoor Roth strategy to give you a ton of tax-free income in the future. So let me review these limits with you once more, because I know I've thrown a lot of numbers at you and I want to sure this makes sense to you. Let's start with the Roth IRA strategy first. So say you're a high income earner making $500,000 per year. Using a proper backdoor Roth strategy, filing the right tax forms, setting up the accounts in the right way, you can backdoor put $7,000 per year, $8,000 if you're over the age of 50. So that's a chunk of change right there. In addition to that, inside of your 401k, remember in the 401k you have 3 ways to contribute: Roth, pre-tax, and after-tax. Max out the Roth contributions inside of your 401k, $23,000. If you're over 50, that's $30,000, $30,500. Now, for the rest of it, using this mega backdoor Roth, you're going to take your employer match, your employer profit share, add that onto the $23,000, and the rest I want you to be doing in that after-tax contribution, hitting up to $69,000. Again, if you're over 50, you can do $76,500. Remember also, those employer match dollars, your plan should start allowing you to select the employer match dollars to be going in on a Roth basis as well. That causes taxes today, but it's tax-free in the future. So $69,000 plus $7,000 if you're under the age of 50, that's over $70,000 per year that you could be putting away inside of your Roth bucket. That's a chunk to be stacking away, and you're going to love the tax-free income that provides you with in the future. Now, before we go today, I want to talk to you a little bit more about the tax implications of this. So when we're converting traditional IRAs, after-tax 401ks into a Roth account, it also takes into account other IRAs that you have. say an individual account, a simple IRA, or a SEP IRA. So make sure you're working with somebody who knows what they're doing, because if you do a conversion in a year, you have other accounts, there's some calculations that you have to do, and you might get a nice notice in the mail from the IRS that you might owe some additional taxes. In addition to that, there's also basis that you have to deal with and interest that you have to deal with when you're doing these conversions, rollovers from the 401k. So make sure that you're setting up a couple different accounts to properly plan for and address these two different types of money sources that can be coming from these after-tax contributions inside of your 401k plan. And again, not all 401k plans offer this. If your plan doesn't offer it, I would encourage your HR department or your plan sponsor to be looking this mega backdoor Roth strategy to see if it's something that they can add or amend inside of their current plan. A lot of companies are doing this now, and it's a great strategy for these high income earners to take advantage of. Remember, you need to keep detailed records to ensure compliance with the IRS rules. You need to keep track of basis. You need to keep track of earnings. That's our job. That's what we help you with as advisors. We make sure all these boxes are checked, and so you don't have any tax and or legal issues when you're using this strategy. So again, the backdoor Roth, you get tax-free growth, tax-free distributions. The mega backdoor Roth, same exact strategy. Now, everybody's tax situation is different. Everybody's planning situation is different. I'm a big proponent of tax-free income, and if you are too, I would highly encourage you to check out these strategies to set yourself up for a tax-free retirement. Now, I would highly recommend, in addition to this, that you work with a financial professional and a tax professional at the same time to implement these strategies to make sure that everything is done properly. Make sure the advisor knows all the ins and outs of these two different strategies so that you're properly taken care of from a tax and legal perspective. In addition to that, these plans should be reviewed each and every year before you do implement these recommendations to make sure that there hasn't been 401k plan rules or regulation rules. And I would highly encourage you to regularly monitor these investment and tax saving strategies to make sure you're still doing the right things. Again, I hope you enjoyed this video. I'm Adam Olson. If you enjoyed it, like and subscribe. And I love it if you would share it with a friend if you found value in this discussion today about the mega backdoor Roth and the Roth Backdoor IRA strategy. Two different ways that you can shift over $70,000 per year into tax-free income for you in the future. Like and share the episode if you enjoyed it, and stay tuned for more. Thanks for listening. This podcast is for educational purposes only and may include references to concepts that have legal and or tax implications. It's not to be construed as legal or tax advice. Such information or opinions is subject to change without notice and is not intended to use as an offer or solicitation with respect to the purchase or sale of any security, insurance products, or offer of individual investment advice. Any strategies discussed may not be suitable for everyone. Mutual of Omaha Investor Services, Inc. does not provide legal or tax advice. Please consult with your appropriate professional regarding your personal situation prior to making any financial decisions. Securities and advisory services offered through Mutual of Omaha Investor Services, Inc., member FINRA SIPC. Riser Insurance is not affiliated with Mutual of Omaha Investor Services. Investing involves risk, including the possible loss of principal. Past performance does not guarantee future results. Diversification does not guarantee a profit or protection lost against loss in a declining market. Purchase of life insurance is subject to meeting underwriting requirements. There is no guarantee of an individual will be insured. Annuities are long-term investments designed for retirement purposes. Withdrawals of taxable amounts are subject to income tax, and if taken prior to 59.5, a 10% federal penalty tax may apply. Guarantees are backed by the claims paying ability of the issuer and are subject to their terms and conditions.